just mentioned about the asset quality issues pertaining to microfinance that were there. So what's the ratio you're looking at going forward?
Brought down the unsecured book portion from 70% to 37 percentage. 30 to 35% will be the unsecured book.
What are those check boxes that you tick as per RBI, rules and regulations to transition to a universal bank?
We will have to wait at least 2 years to meet the criteria set for the transition from SFB to universal bank.
Welcome to ETBFSI.com by the Economic Times. Today we're joined by Dr. K. Paul Thomas, MD and CEO, ESAF Small Finance Bank. Thank you very much, sir, for your time today.
Thank you, sister. Thank you.
So the first thing I'd like to begin with is understanding the priorities for ESAF Small Finance Bank going forward, short term and long term.
So the short-term priorities for the bank is to uh, strengthen the asset quality issues we have faced in the microfinance portfolio, and the asset diversification strategies, which is we call it as MARC, MSME, Agri, Retail, and Gold. The strategy to strengthen. So these are all the two short-term strategy. And on a medium term, we are already working on a IT transformation project. We are migrating from our current CBS profile to Oracle FlexCube, and other set of uh, 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 IT solutions are also getting changed. And from a bank in a box model to a bank managed system, we are moving. So these are all the two important priorities for the bank on a short term and medium term basis.
So any business numbers you're targeting for the upcoming fiscal years?
Yeah, we are targeting around on the liability side 7 to 10 percentage growth we are targeting, and on the asset side it will be close to 15 to 20% growth we are targeting.
Sure. I'll speak about MARG. That constitutes about 59% of
Yeah.
your book, right?
Right.
And micro loans have been 37% for you. What is the aspirational ratio you're looking at? What is the kind of percentage you want to move this towards? Let's say you just mentioned about the asset quality issues pertaining to microfinance that were there. So what's the ratio you're looking at going forward?
See, as a ESAF Small Finance Bank got its legacy in ESAF Microfinance. So when we started the bank in 2017, it was a 100% microfinance assets. So then we brought down 1 year ago, it was 70% micro and 30% secured book, and we took a strategic initiatives to diversify our asset to mainly the secured asset to these four segments: MSME, Agri, Retail, and retail constitute both vehicle loans and mortgage loans and gold loans. And so we were able to brought down the unsecured book portion from 70% to 37 percentage. So going forward, we will keep 30 to 35% will be the unsecured book, including micro and other unsecured assets, and another 35 to 40% will be gold, and rest will be divided between mortgage, mobility, and agri and MSME.
All
That's
right.
the plan.
So if I am to talk about the, foundation of ESAF, it dates back 34 years ago,
Yeah.
more than that. So you've started out with a certain, focus towards social enterprises, and then, giving out loans, giving out micro loans. So how do you, plan on sticking to this? What's the larger goal to sort of exit microloans eventually? Like you say, you'll bring it to 30 to 35% now, and what's the whole idea and plan around this?
See, we are not planning to exit from the inclusion agenda.
Hmm.
So, micro loan is only one aspect of financial inclusion. So, you are rightly said we started as a non-profit developmental organization. Then we
Right.
became a regulated microfinance company, and then later become a scheduled commercial bank as a small finance bank. So, even in all these transitions, we have never lost our focus.
Hmm.
So, we continue to be a triple bottom line institution. We have a we have a triple bottom. We call it this 3P approach: people, planet, prosperity. So each of the 3P is very important important for us, and we measure the impact in all the three areas. So 70% of the branch network is in rural and semi-urban areas. We have opened branches in remote locations, tribal the dominated blocks and districts. We have got very good presence. So we are not moving away from our focus, our priorities, or the mission. So, but it is not only about unsecured loan. So it is about deepening the financial inclusion, providing. So we are giving insurance cover for unbanked or unserved segments. We are distributing pension products of the PFRDA
Hmm.
to the same segment.
Hmm.
So we are providing banking access by opening bank account and payment services to the unbanked and underserved segments.
Hmm.
So it is not only serving the unbanked means doesn't mean it can be achieved only through unsecured micro loans.
Hmm.
So their aspirations they are also growing. So we have now introduced the micro enterprise loan. The customers
Hmm.
who have already started a small micro businesses, nano businesses, they wanted to graduate to the next level. So, through our CSR projects, we are giving them training and we help them to graduate to the next level, and we have a product for them. So, similarly, we have developed products for in the agri segment. So, smallholder farmer is one of our focus area. So, we continue to serve the inclusion agenda, focus on the inclusion. So, but even maintaining 30 when we grow our other assets, so the 35% itself will be large number.
Of course, of course. On that note, what kind of product diversifications will you be looking at when you speak of MARG? Going forward, are there more segments that you would want to venture into as you grow bigger?
See, definitely in these four segment itself, there is a lot of
Hmm.
opportunity
Hmm.
for product diversification. MSME, there are different level scales of MSME there in our country.
Okay.
There are very small, there are medium level, and growing MSMEs. So all of them need different products. So we have divided the MSME segment into two.
Hmm.
One is emerging MSMEs and prime MSMEs.
Okay.
So different products are there for both the segment.
Hmm.
And agree, we have to start with the smallholder farmers are organized into groups, and we give a farmer interest group loans to begin with. Then we have
Okay.
Kisan credit card. Then we have a agri equipment loan products. We have FPO finance schemes. We have a agri infrastructure finance schemes. So all sort of various agri finance products we have developed, and we have agri relationship managers are placed in various locations. We
Hmm.
partner with farmer producer organizations to reach out to the smallholder farmers. So especially in the retail also we have vehicle within vehicle we have two wheeler, we have car loans, we have used car and
Hmm.
commercial vehicle loans. So it's well diversified within each of the product segments are diversified. Mortgage, we have new home loans, affordable home loans, lab, micro lab. So these type of products are there. So each of these four segments we have sub segments and developed products for that.
Sure. I'll draw your attention to the microfinance bit and try to learn more from you on what have your learnings been throughout the previous cycle. What are those takeaways that you bring and that you would apply to lending going forward?
See, ESAF is into microfinance for the last 3 decades. We are into from
Exactly.
1995 onwards. We have been doing microfinance, and we have seen various cycles of stress also. So, one differentiator for this current stress we have just overcome or going to overcome, I would say it was one of the longest stress cycle we have seen.
Okay.
So there are multiple reasons to it. Mainly, it was over-indebtedness and the guardrails and Sankalp guidelines issued by Sadhan, where I am the chair of
Chairperson.
chairperson. So have really given results, I would say. So there are a lot of discipline has come. What happened is that in the name of microfinance, there are a lot of unregulated, unregistered entities have come up. So they
Hmm.
are not part of any of these uh, associations or SROs. So, but they also do give small loans. It is called, it comes under the umbrella of microfinance per se.
Hmm.
So that also created one reason for the stress,
Overheating.
I would say. But now I think we have overcome the stress across the geographies. There are collections have improved. People also have become more responsible now.
Sure. Any measures on regulating the, mushrooming of the unregulated entities you just spoke of?
There are regulations already there. State governments have passed regulations to regulate these unregulated, unregistered entities. So I think that is enough for regulating those entities.
All right. Sir, I'll speak about margins going forward, and the rate cut cycle has been going on. 125 basis points of rate cut has already happened. Sixth is another MPC outcome that we all would be waiting for. So margin squeeze has been natural amongst banks, right? So how have you been managing this? What's your guidance on NIM going forward, and what are the strategies you've been, deploying to sort of tackle the margin squeeze?
Yeah, the rate cuts and also the change in our asset mix have impacted the margins for us. So it will take some more time to adjust the rate cuts, because rate cuts immediately we will have to pass on the benefit to the loan customers. But on the deposit side, it will repricing will take time.
Hmm.
So as of now, our NIM is at
Six.
6%. So we are expecting that as the asset book grows and diversify and the repricing happen, so there will be an increase of 20 to 30 basis point increase. Definitely, we are expecting.
So, and any guidance for FY26
Yeah, that's what I said. So we are expecting.
increase?
Yeah,
Okay.
on the margins.
Okay, sure. I'll also like to talk about the deposits.
Yeah.
How difficult is it for small finance banks compared to, the other larger universal peers to manage low cost deposits? And what has been your strategy so far? How satisfied are you with your CASA levels? What are your aspirations on that front?
So deposits across the banking sector is facing challenges in
Correct.
deposit mobilization, because now the people have multiple options for saving. So we, as a startup bank, building low cost deposits specifically from the current accounts, it will take time. Building a current account base will take time, and even the SA is not a free deposit. So we are paying our average SA cost is close to 5%, 5 percentage. So going forward, more. granular deposits have to be mobilized. So we are targeting to mobilize deposits from the low income. So we have developed a few products suitable for the low income segments. So small value recurring deposits for various life cycle needs. We have developed 1 year ago. We introduced a dabba saving product because traditionally in rural areas women save money in rice bowls. So we introduced a steel rice bowl with a secret portion. So where
Okay.
people can, so we have distributed these to them, and on a regular basis, our staff or agents go to them and collect these deposits. So we wanted to scale it up. We did a pilot, and good
Interesting.
results was encouraging. So we wanted to scale it up. That's one model. We think that we have seen in this happens in other countries where
Okay.
where the low income segments or their inclusive banking verticals support their corporate lending books
Yeah.
or through their liabilities. So we hope that that is possible in India also.
Sure, sure. Speaking of Union Budget 2026, we just saw the setting up of high level banking committee. Now, what do you make out of this committee? What do you think the focus should be for this committee as a banker, as somebody who's sort of built this bank for about 34 years to what it is now? For the sector, for your industry, what is it that you would want that committee to focus on? You know.
Yeah, the TOR is yet to come, so we don't know the detailed intent of the committee it. But my expectation is that we have differentiated banks, so it will be good to have differentiated regulation also. So that is
Okay.
one of my expectation from the high level committee.
So, if you can help me understand more about the differentiated regulation you just spoke of.
We have small banks. We have different types of banks or financial institutions.
Right.
So they are all operating in niche segments.
Segments
So one common rule may not work for
across.
across. So it will be good to have specific regulation or guidelines for each of the institutions.
Sure. Noted. I'll also talk about the US trade deal. I mean, we see markets are so sentiment driven. They sort of slumped on the budget day. We saw it recover. US trade deal was
Yeah.
another day. We saw it recover. And given your focus has also been on MSMEs, my first question to you would be, did you see any sort of impact while all this uncertainty was hanging on the tariff front from 50 to 25%? Did you see these sectors getting impacted because you are the one lending to MSMEs? And now that this trade deal has been announced, let's hope it stays through. It sticks to what it has promised. Uh, what's the impact do you see on this deal?
Yeah, so we see definitely when the uncertainties were around, and there is a lot of gloomy especially in the export
Oriental.
oriented area geographies areas. One example is Tirupur, where the textile large number of textile units are there.
Hmm.
Even though we are not funded to any large export units or MSME units, but the people we have customers who are employees of these export units or small vendors associated with these units. So all of them got impacted. A lot of uncertainty. They got cancelled their orders. They don't know what is going to happen. So now there is a lot of hope in those areas. We could see that hope, and we see that will reflect on the credit intake and growth also in the coming days.
Sure, noted. Sir, on that note, while we started speaking, you mentioned about the technology platform,
Yeah.
migration of the tech platform. What is the cost you are sort of spending on technology? If you could, get give us some color on the capex and opex cost on technology and IT, and going forward, how much do you think it will be a part of your whole budgetary allocation?
So, as I said earlier, we were on a bank in a box model. It was on a 100% OPEX model. So we were spending around 80 to 90 crores per year.
Okay.
So now, few there will be in the now we are managing the some of the things directly managing, and on an OPEX mode, we will be spending annual spending will be around plus around 20% increase will be there on the spending.
All right.
Yeah.
And on the branch expansion, you've largely been in the South India. Uh, what is the branch expansion numbers you're targeting? Any new geographies that you want to venture into?
See, we have got a very good geographical presence now. We are present in 26 states, 24 states and two union territories. We have branches. We have got 788 branches, 50% in South India. Then up south, Maharashtra, Madhya Pradesh. In the eastern side, Bengal, Jharkhand, Bihar. Even in northeast also we have got good presence in Assam, Tripura, Meghalaya, Nagaland. UP we have presence. So we will be deepening our presence in these regions, in the east, central India, and the northern India regions. We will be deepening. We'll be adding more branches. So in the past we have been opening at minimum 20 to 25 branches per year. We have been opening every year, so that will continue that.
Does that mean now you'll be focusing on other parts of the country?
Yeah, we already have presence, so we will deepen our presence in these markets where we already these zones regions where we already open branches. We will make more branches and make it more a cluster and regions in these regions.
Sure. On to the transitioning of small finance banks into universal banks, NBFC, MFIs, payment banks securing SFB licenses.
Yeah.
Um, First, what are those check boxes that you tick as per RBI, rules and regulations to transition to a universal bank? And that is about whether you check the boxes or not. Second question, what are your aspirations on going towards a universal
So
bank?
like natural as a aspirational from an NBFC MFI to a small finance bank. From there, we need to move on to a
Right.
universal bank definitely. But we have, as per the guidelines, we will have to wait at least 2 years to meet the criteria set for the transition from SFB to universal bank. So we have to be profitable for 2 years, and the GNPA and the net NPA requirements and all we'll have to wait for at least for 2 years for us to fulfill.
So are you confident about matching these up in
Yeah,
two
yeah,
years?
we are confident about that.
And after 2 years, we can see
Yeah, we can.
ESAF applying for the SFB license.
Yeah, once we are qualified to apply, definitely we'll be applying
All right,
because that's a aspirational roadmap for any small finance bank, I would say.
sure. On to my last question. What's your vision for ESAF? It's grown from, like you said, NBFC, MFI to an SFB, to the certain segments that you cater to the agenda you have in mind about financial inclusion. What's your bigger vision about, leading ESAF to places? What is it?
Yeah, started as a development organization, as a social organization. Our vision, our large vision is to be the leading social bank in India, serving the real economy, the farmers, the women entrepreneurs, the micro entrepreneurs, and touching the unbanked and underbanked segments of the society. So this is our dream, and we are working towards that.
All right. Sure, sir. Thank you so
Thank you,
much for
thank you,
sharing your insights.
thank you very much.
Thank you for watching etbfsi.com.